Global markets are digesting mixed signals today. Earnings disappointments and leadership shakeups are dragging down consumer-facing giants, while fresh deals and international partnerships are opening up new lanes for growth. From Wall Street boardrooms to Africa's startup hubs, the theme is clear. Reinvention is happening everywhere, even if the market reaction isn't always applause. My name is Eniola Lunge, and here's today's Zoom Out for August 21, where I help you see the bigger picture. Hertz announced it will sell pre-owned cars through Amazon Autos, giving the rental giant a massive e-commerce platform to offload its vehicles. Investors cheered the move, sending Hertz shares higher on expectations of improved visibility and profitability, according to Reuters. This partnership positions Hertz to capture online car buyers while Amazon deepens its reach in the auto sector. It also signals how traditional players are increasingly leaning on digital platforms for growth. So what's your Zoom Out takeaway? In today's markets, distribution is just as important as product. Hertz's move shows that legacy companies can reinvent themselves by plugging into the ecosystems that already control consumer attention. Kenya is negotiating with China to convert a major dollar-denominated railway loan into the Chinese yuan. The move would help reduce pressure from a strong US dollar and potentially secure lower borrowing costs from Beijing, according to Business Daily Africa. A yuan conversion could ease Kenya's fiscal stress and deepen China-African financial ties. It also highlights how currency diplomacy is becoming a strategic tool in global infrastructure finance. So what's your Zoom Out takeaway? Debt is not just numbers on a spreadsheet, it's leverage. Kenya's move shows how emerging economies are actively rebalancing financial risks as U.S. interest rates and dollar strength continue to reshape global capital flows. A group of Japanese investors have launched a $20 million fund to back African tech startups with a focus on mobile payments, logistics, and sustainability. This underscores growing Japanese interest in Africa's digital economy and a widening global investor base for African innovation, according to Launchbase Africa. The fund could catalyze early-stage growth in key African tech verticals while strengthening Asia-Africa capital flows. It also adds momentum to Africa's role as a frontier for mobile-first innovation. So what's your Zoom Out takeaway? Follow the money. As global investors diversify beyond traditional markets, Africa's startup ecosystem is becoming a magnet for capital, and Japan wants in early. Estée Lauder stock fell after the company posted weaker than expected results and offered a downbeat outlook. The company cited falling demand in Asia's travel retail market as a major drag on sales, according to Investopedia. The results highlight ongoing headwinds for luxury and beauty brands that rely heavily on Asia's post-pandemic consumer rebound. Investors are now questioning how much growth is left in high-end discretionary spending. So what's your Zoom Out takeaway? Luxury's pandemic-era boom is fading, and companies like Estée Lauder are learning that global demand can shift quickly. Markets are starting to separate winners from those that can still adapt or that are still relying on old consumption patterns. Target appointed Michael Fidelki, a longtime company insider, as its new chief executive officer. But instead of rallying, Target shares fell. Investors are wary because the retailer has now posted its 11th consecutive quarter of sales weakness, raising questions about whether an internal peak can truly shake up the company's fortunes. Retail stocks remain under pressure as consumer spending patterns shift and discount chains outperform traditional players. Target struggles underscore the difficulty of balancing margins, e-commerce investments, and inflation-sensitive shoppers. So what's your Zoom Out takeaway? Target's story is a reminder that in today's retail landscape, leadership changes alone don't move markets. Execution does. The real question is whether traditional retailers can reinvent themselves fast enough to compete with leaner, tech-enabled challengers. So the bottom line is this. From Hertz reinventing itself with Amazon to Kenya rethinking its debt strategy and Japanese capital flowing into African tech, today's stories are tied by one theme: adaptation. Some companies and countries are seizing new opportunities, while others like Estée Lauder and Target are still trying to find their footing. The global economy is rewarding those who pivot quickly. The question is, who's bold enough to make the right moves before it's too late? Which of the stories stood out to you? Drop your thoughts, share your comments, and don't forget to subscribe. When the world zooms in on the noise, I zoom out so you can see the bigger picture.